So hello traders and welcome to yet another week. This is the last week for the month of July. And let's look at what we have today in our Gold Rush Daily. And we still see the price pushing in our direction. Remember, we had the first entry at this particular point. We had the second entry at this particular level using the Fibonacci retracement and extension. So let me delete that. So I'm able to delete that because the bigger picture is for the price to push all the way down to this particular level, whereby we saw the price reach on Friday. But with the sentiments of what is coming out, the US EU trade deal, I'm looking at a scenario whereby maybe probably the next level to watch for gold is around 33.10 thereabout. You can see where we have these 5 minutes OB. That is the next support level between 33, yeah, around 33.10. This is the next support level to watch. So I still anticipate for the price to push slightly lower on the downside, so we can extend that. On Friday, we saw the breakout from this particular zone, and I was looking or anticipating a retest of the same zone, so as maybe probably to look for some re-entries. And we saw today the price coming to retest at this particular zone, and we are seeing some more bearish price. Of course, with the EU and US trade deal, we anticipate to see more strong dollar, right? We anticipate maybe to see a stronger dollar, and the reason why we might maybe probably see a weaker gold. So we might still looking at a bearish sentiment. Again, if you look at the kind of pattern that is happening here, these are the patterns that are usually like seeing these are descending channel that is happening around this particular point. So anytime we have a downtrend and then we have an ascending channel, higher chances that we are looking or anticipating at a breakout on the downside, the price continuing pushing on the downside. And the first level that we'll be looking at is this support level here at that 310, also which is a 5 minutes OB. Let me go there to the 5 minutes. I show you the 5 minutes OB, right? So this is the 5 minutes order block at this particular level, all right? That's why we have the 5 minutes order block. So I anticipate the price of gold to continue in the bearish trend for some time until the price now taps into this particular OB, okay? So the moment we see a breakout from this particular level, then two things are likely to happen. We might see the price breakout and push directly all the way to this particular point. Number two, we might see maybe probably the breakout, all right? The breakout, then price pushes back to retest the OB before we see now the continuation of the sales, all right? So in case it happens this way, where we have the breakout price taking out these liquidities or creating a BOS at this particular level, right? So, and then maybe probability pushes on the upper side before tapping our zone here, then we will be looking at some joining or entering more sales opportunities at this particular OB to push the price all the way to 33, around that 310 as per this setup, right? So, so far so good. Last week was quite bearish. We were pushing the prices we had a very nice selling trend, and I anticipate the same maybe to continue today, so that now we may be having a solid structure, a solid complete of these particular trading range that we have. If you look at the 4-hour time frame, you see the price originated from this point all the way to this point, and therefore we are anticipating the same to come back to this particular point. However, depending maybe probably on different factors, maybe in case the price maybe pushes on the upper side before coming to this level, then we'll be using this 4-hour OB for a re-entry, okay? So in case the price maybe let's say from where it is pushes back to that level, then we can use that level in terms of entering more sales opportunities to push the price to around 33.14, 33.10 levels that we are anticipating, okay? So those are the different scenarios that we are looking at. we can be able to minimize this level just like that to the 1 hour OB so as to minimize the risk. We can also be able to go to fine tune that lower to the lower time frames, like maybe probably the 15 minutes time frame or the 5 minutes time frame, as long as you have a risk that you feel it's really accommodative. And the reason why this level is a quite strategic level or a key point of interest is because we have a break of structure here. We see the impassive move of the price, and that means in case the price comes to revisit this level, then this is where we have our OB, that is our order block. And as you can see, also we had some consolidation here, or what we call base. So also this serves as a mid supply zone that we might see the price react from that and then a push on the downside. So looking at the fundamentals, maybe what might likely push gold today, we don't have any high impact news apart from the ones that have already been released, which are not scheduled in the Forex Factory calendar, the deal between EU and US, whereby we are seeing some strength in the dollar index. So, but on Tuesday, we'll be having the USD JOLTS job opening report. And then on Wednesday, we'll be having the ADP non-farm employment change together with the advanced GDP quarter after quarter. And then later at 9 p.m., we'll be having the federal funds rate, that is the FOMC, whereby we anticipate to see the Fed maintain the rate at 4.05%, right? And this is because of the inflation that has been pushing slightly higher. That is the inflationary inflation as a result of tariff. We have been seeing pushing a little bit higher to about 2.7, the yearly CPI. And then later on at 9:30, we'll be having the FOMC press conference, which will now give reasons behind the decision that the Fed is going to make, whether dovish, we are going to see a bearish dollar. If if hawkish, you are going to see a strong dollar. If dovish, you are going to see a weaker dollar. But I anticipate a bit of hawkishness because the Fed might take a stance whereby they might slightly tighten the monetary policies in terms of trying to contain the inflation as a result of the tariffs, right? Then on Thursday, we'll be having the inflationary data again, the core PCE price index, and also the employment cost index for the USD and the unemployment claims for the USD. And Friday, we'll be having a major volatility, which will be as a result of the non-farm employment change. So those are the USD news that are likely to impact prices of gold this week. But for now, we are looking at the price coming to this level. So the moment, because this level is a key level of support, as you can see, the price has, if we push this side, we see the price has been tapping this level and then rejecting. But the moment we witness a break below this particular level, then our next zone of interest will be price coming to these particular levels here. All right. So this will be the next level of interest. The price pushing to about 32.92, 32.82 levels, right? So that will only come into place once we see the price break below these support level around 33.14 and 33.10 levels, all right? So with that, guys, let's meet later on today. We have a major webinar that is coming in. That is the mid-year research, whereby we'll be looking at different factors, the volatility, inflation, tariffs, and all those stuff, how the markets have performed for the for the first half of the year, and what we shall be anticipating the next half of the year. So the link is in the description. Check it, register, and see you then. For the next Gold Rush daily, let's meet tomorrow for more insights. All right. So with that, mine is to wish you the very best, a very fruitful week ahead. Remember to stay focused, to stay disciplined, and trade with purpose.